Good morning, good evening, good afternoon, wherever you're listening to me from. How is everybody doing? A quick rundown on the market. So, in the days I've been looking at this, and we have a December low here. Market was up here. We have a December low here. We have this volume imbalance here, and we have a November low here. We have an imbalance here now. Volume imbalance here. I want to see when it gets here, this volume imbalance here, because the bodies didn't touch. I want to see if it's gonna break on top of it. If it breaks on top of it, we'll reprice to it. We can buy it up to this high here, because you already took out this low here and balanced this volume imbalance here in the daily. When market was here and he broke under this low and he came back up, I says watch out with this CV here. Sell side imbalance, buy side inefficiency. Came up, boom, tagged it. It didn't break on top of it and dropped. Where? To the bottom imbalance. You gotta see what you have on top of the market and the bottom of the market. So now we want to see what happens inside this volume imbalance. So we can put a square there. Square it out. Bodies to bodies. Okay. So now we go down to the 4-hour. I'm gonna explain to you why I took this buy. I took a buy in the lower time frames. You see the 4-hour, this wick right here, and the market came down. It filled in this. Busy. It's not a fair value gap. This body's candle did not close on top of this high here, so it's a busy buy side imbalance, sell side inefficiency. Came down and filled it in to the upside. I believe we're coming up here, but we gotta break through the daily volume imbalance, which is this one right here. Daily volume imbalance. Okay, so once we cross through the volume imbalance up, once it go up, reprice, and up. That's what I like to see in the future. Why? This high to this low. Equilibrium. It breaks on top of equilibrium, we're going up. If equilibrium holds price, then it's gonna drop to the low. So we just gotta wait for it to kill the daily volume imbalance. Always trade in ranges, okay? Always trade in ranges. Let me show you why I took this buy today. Gotta lock this. Let me lock this real quick. I'm gonna start moving shit. Oh, okay. So the market trades, like I told you, in ranges. This is about to take my take profit, but I don't put my take profit up here. I'm gonna be greedy. But for today, let's leave it there. Let's leave it where it is. But it's going inside here. I'm gonna put it inside the volume imbalance. Yeah, that's right. Right there. Okay. So The market's traded in ranges, okay? If you put your Fibonacci from this low right here to this high right there, you're not gonna get an entry. You're not gonna get an entry. Why? Because you're gonna be thinking that the market's gonna come back down to equilibrium to then go back up. Okay? But if you look right, if you look correct, this is a new low right here. That's a new low here. Why? Because he came down, ran stops, took out this low. That means that's a new low. And this high is still a high. And where did it came down to? Equilibrium. And then what? So I was like, oh my God, yeah, that's right. So I bought right here on the way up. When I noticed what was going on. At the beginning, this morning I was like, is that's low, that's coming down here. That's coming down here. But and then I was like, wait a minute, this low right here, that's a run on stop. That's a new low. When you see this, it's a run on stops. Took out this low. This is a low, my people. That's a swing low right there. Why didn't it come down here? Because there's no news today at all. No news at all. Right? So why would you want to come back down here to go all the way up here when you have this right here to fill in? And this right here is your what? Your support. To keep price going up. When you see the range that you're trading in, okay? You have a bigger range from up here to down here. Down here you're a discount, okay? Every important range is gonna get traded back to. You see that? From this high to this low, that's a range. He crossed it up, he came back and repriced to the middle of it. You see that? If this starts going down here, then you're no more bullish. Then you're looking down. But it did not break the middle of this range. You see that? Now we go into this range. From that high to this low. From this high to this low. That's a new range. You see that? So if you see that, that means that you're waiting for it to break the middle of it to continue going bullish. It has to break through it to continue going bullish. So I'm looking for the market. I'm looking for the market this week to see if he wants to break on top of the volume imbalance here to continue going up. That's a lot of shit on my no, keep them, my bad, I'm so sorry. Okay, so yeah, we gotta keep this is where I want price to go. So this low right here is not that much important to me anymore. He already used that here and he's killing it to the upside. So now my focus is on top of this high right here. I want to see what happens on top of this high. Excuse me. I want to see what happens on top of this high. This high can go up, come back down, accumulate, and go up. Breaks it to the upside, reprices to it, and go up. So that's a quick rundown on the market. It's a bullish scenario right now. Let's check out the dollar for you real quick. The dollar should be going bearish. This right here was an order block, a bullish order block. It used it here up. When it comes down, it's also a breaker. Low, high, lower low. That's your breaker here. From this high to this low, that's your breaker here. From this high to this low, that's your breaker. Used it here. Once it starts coming back down, it's gonna go right through this fucker. And you ran right through it. So remember, when it uses the breaker once, it's gonna come and it starts coming back down, it's gonna go right through it, and you ran right through it. Now this gap here in the US dollar got filled in. See, it went up, filled everything up here nicely into here. It doesn't have to go up here because there's a low here that filled in all this right here. This filled in all this right here. So it doesn't have to go all the way up there. Because it's not filled in from here, from this high to that low. It's not filled in. It filled in now. Now it's ready to go back down to down here, to this low here. That's the daily. And if you look at the weekly, you're gonna see where market wants to go. To the 80s. Whoa, partner. Let's see what happens. But for right now, we are bullish on indices and bearish on the US dollar. And we got the Dow Jones. Dow Jones. Accumulation, manipulation, maybe to the downside. Let's see what happens. There's nothing up here that can tell me, that's gonna tell me I'm going this way, I'm going that way. There's nothing up there. Just gonna make a new high. All-time new highs. We don't know where it wants to go, but we know that it just broke this high here, and it's repricing to it. If it breaks to the downside, then it's coming back down. We just gotta wait. So we are on a waiting list. Well, you don't trade Dow Jones, but let's check out S&P 500. It's in my range from this high to this low. You see that? It took out this low. It never came down to the what? To the volume imbalance down here. So what is it doing? It's gonna take out the highs. I'm looking for it to take out the highs and make a new high. It'd be 1, 2, 3, and then drop. It's a whole bunch of things here. So this is a low. From December. That's the January low. And that's the another January low. And this January also. 26, yeah. But he took out the lows, and what did he do? Went back into the range, meaning this is a run on stops. Back into the range, back up. It didn't even close underneath this low here. You see that? So if it didn't close underneath this low here with the bodies, I'm not looking down anymore. Looking back up. This is a big candle, was from Friday. There's nobody trading on Friday, so what did it do? Not a lot of people trade on Friday, so what happened? It made the long candle taking advantage that nobody's trading. So, but as long as you can read the market and see where it wants to go, look for your inefficiencies in the market, your volume imbalances, your fair value gaps, your CBs, your BZs, your gaps. You know, you got them. You got them. There's a high here and there's a high here on the NASDAQ. Things gonna go all the way up here, make new highs? Maybe, you know, you don't know. We don't know. We do not know. There's a high here. There's a high here. and there's a low here, and it's this. The thing that killing me, the thing that's killing me, did not take out this low. Cause this is the range you're trading in, from this low to this high. Okay. Now this is a new low because it took out all these lows here, so this is a new low. So now you're trading from this low to this high. We are aware a discount has to go up. See? Took the wrong way. Sorry. Your fib is here. Boom, it has to go up because it's a new low. But this is Nasdaq. I thought it was S&P. I thought S&P was gonna get to that volume imbalance and it didn't. So let's see what happens here. That's all we gotta do is wait. So my entry was over here in the 5 minutes. I'm gonna show you my entry today. Right here. Why? Because it took out the high. Right? Took out the high. This is your old high. You just took it out. It has to come reprice to the old high. I don't want it to go down here into here. I don't want it to go down here. I want it to just bring that high. Just kill it. If the fair value gap was here, then fine. It would have been a double tap. But it because we didn't have a fair value gap, I only went in with one. And see, now my stop loss is gonna get over here. I don't think it's gonna come back down before taking out that low, but you never know. So let's put it I can't take nothing out because I'm only trading one mini contract, so I can't take anything out. What am I gonna take out? This candle should be the support it's looking for. When price is on the way up and it comes down, it's just looking for support because it needs the support to continue going up. So your last bearish down candle, the down close candle with the big bodies, that's what you look for support. You don't look for small bodies, you look for big bodies candles. And this should be support or price to go down. If it crosses it down, then it's going down here. You get out of the trade. You get out. You don't want to give him money back. You get out. It comes back here. It can come down here, get support here. This is midnight, so it's on top of midnight, so you gotta watch out. Remember, on midnight, when it's in the bottom, you're a seller, buyer. When it's in the bottom, you're a buyer. When it's on top, you're a seller. So what time is it? 11:30, 11:40. So it should be coming up here for like 2 o'clock. Get up here by 2 and then do whatever he wants to do on the way down, whatever. So, but my friends, remember, December, if you trade in December and January, low risk. Into February, when market starts moving, then you start looking for your risk to reward greater. You do not want to be in a 2-to-1, meaning you're losing 400 to get 200. That's not good. You want to be in 100 to 300. You want to risk 100 to make 300. And if you keep your mind like that, every time you lose $100. But every time you win 300. You'll be profitable in trading. You'll be profitable. All you gotta have is a nice plan and a good mentor that shows you what you look for. That's all you need. Once you know what you're looking for, then you go and you risk what you need to risk, and always try to go one for three, 1 for 2, 1 for 3. Okay, that's it for today. I'll be back more constantly now. I've been sick for like 2 weeks, so I haven't done anything. But I'll be back. I'm back now. So hey, God bless everybody. Share my videos with whoever wants to learn. And I'll talk to you guys later. God bless everybody. Good luck to all traders out there. God bless.